following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes.
Mark Longo here from the Options Insider Radio Network and theoptionsinsider.com, and I'm breaking in to your regularly scheduled program to give you guys an update on our Options Insider educational series. Now, a lot of you guys have been asking us when we're going to do something else like our groundbreaking Unusual Activity Forum that we held back in May at the CBOE. Well, mark your calendars for December 7th because we're diving right back into the educational fray with an epic event on that Saturday, December 7th. We're going to break down the retail options trading landscape with 3 seminars held in partnership with our friends over there at optionpit.com. We'll break down the key mistakes that cost retail traders real money in the real trading marketplace, as well as how to properly implement and manage and adjust some really critical strategies like debit spreads, credit spreads, collars, risk reversals, butterflies, covered calls, the whole 9 yards. And best of all, this is going to be an online event, so you can join us from the comfort of your own home in your favorite bunny slippers. Don't miss this epic educational extravaganza with 3 seminars from 3 of the leading names in the business. Reserve your seat today at theoptionsinsider.com/events. And now I'll return you to your regularly scheduled program.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tusaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, everybody, that rocking tune means it is time once again for the Option Block, everyone's favorite bi-weekly source for all things options related. My name is Mark Longo from a little thing we like to call the optionsinsider.com, and once in a while when I get a chance to hop on the old microphone for this here Options Insider Radio Network. And joining me on the microphones today, we have a great crew. We have the usual gang of suspects, actually. Some of them have swapped chairs and are a little bit closer to the Options Insider home studio today. But other than that, we have the same crew. Starting off with the man usually who beams in the farthest. We'll give him pride of place today as perhaps being the closest, or I don't know how close you and the Viceroy go back and forth, but second closest perhaps. He is none other than the Rock Lobster, beaming in from right down the street here in sunny, scenic, warm, tropical Chicago. Mr. Andrew Giovinazzi, how you doing today, sir?
I'm in the Windy City. What can I say? I walked outside and I froze my bum off. That's all I can say. Chicago is colder than Maine.
It was 60 degrees yesterday. You show up and now it's 20. So I'm just saying.
I was here yesterday
coincidence,
and I was sweating my you-know-what off. So I was freezing today, though, to make up for it.
There you go.
But I could handle it.
You're a Mainer. You can handle it.
I was okay. I think I did okay. I had to keep up with Sebastian, walking around the city, but we got a lot done.
And also joining us back from his extended hiatus, none other than the Viceroy himself, good old Alex Jacobson, fresh off the plane from his big extravaganza out there in scenic and sunny San Fran. Alex, welcome back to the show, sir.
Mark, it's good to be back. And once again, you would be amazed at how many people came up to me and out in San Francisco and said, I hear you on the show. It's always very rewarding when they go out of the way and stop and say, I listen to the show religiously. Had a handful of people who acknowledged listening to the show. So it was, first of all, it was a fun event, but it was very gratifying to meet some of the listeners.
I heard you were quite the rock star out there. Huge attendance, if my little birdies are correct.
Yeah, big numbers. I mean, I have not seen in-person attendance. We did both in-person and virtual, but I had not seen rooms filled with that many people since working at the SIBO in the 80s and marketing the OEX, when if you got less than 1,000 people in the room, it was disappointing. But we had big numbers, and especially big numbers for a weekday event. And we're at the top of the hill. We did the event at the Fairmont, which is at the top of Nob Hill. So you can't casually wander in, because that last block is a killer if you're coming from the financial district. But it was a fun event, a great event.
I'm glad to hear that there's still strong demand for domestic options education. You hear the anecdotal evidence from a lot of people who do a lot of in-person stuff all around the country. They say you'll do a covered call seminar or what have you in New York or LA or something. You'll get maybe a couple hundred people. That same seminar in India or China or somewhere else in the developing world, and you get a couple thousand over a couple of days. So I'm glad to hear you had a resounding response here in the domestic U.S.
I was saying, how many did you guys have out in San Francisco?
In person, we had 900.
Are you serious? Wow.
Yeah. Wow. That's huge.
Yeah. You know, Mark, what the story used to be when options got tough is I used to quote that and say, if you have to get 200 people in Baltimore, you'd have to raffle off a Buick. And you go to Singapore, to your point, you go to Central Asia, and you hold an options event, and the rooms aren't big enough. That's how much those folks value quality professional education. And but it has shifted a little bit here, and I don't know if it was the bull market, but I mean, we talked directional stuff, we talked premium harvesting stuff, and there was appetite all around. So, it was fun. I haven't taught a room that size, as I said, since the late 80s. So that's a fun thing to do.
I think it was your rock star status from your appearances on the option block that catapulted you into that rarefied status. 900, that's at least 5x our audience right here, so that's a big number.
Yeah. People wanted to touch the hat. The thing was the Viceroy hat. They all wanted to come over and touch the hat. So we made that a good luck charm.
You may need to think about picking yourself up one of those. I've been using that metaphorically for a long time, but it may become de rigueur for your future apperances, sir.
What does the Viceroy hat look like? That's all I want to know. I keep imagining one of those guys from the Phantom Menace, the Trade Federation dude with those crazy hats. That's what I kind of imagine.
That's the best thing about the Viceroy hat, is that it's completely up to your imagination. Whatever you think Alex is wearing on his head that day, that's what he has on. So
I'm just saying it's big, man. Whatever that hat is big.
And last but certainly not least, you know him, you love him, as the Uncle Mike Tusaw from the land known as scenic and lovely St. Charles, and also coming to us by way of RCM Wealth Advisors. Mr. Tusaw, welcome back to the show, sir.
Always a pleasure to be here. One of these, I got to get a hat of some sort.
I get
a smoking jacket for the strategy block, but I think I need a hat too. I think I need to add to my wardrobe. What time does Dollar General close today?
I think a nice Deerstalker, like a Sherlock Holmes hat with a nice pipe to go with the smoking jacket, I think that's a good look for you.
I think that's a good idea.
I think you can pull that off, sir. So the next show, we will all have jaunty caps, and it'll be quite fun. Of course, I have my fedora, but I only put it on for the odd block. It'd be inappropriate to wear it now. Speaking of wearing it, we've been gassing on here at the intro. People want us to dive right into the show, so we're going to do that and dive right on into the trading block.
The trading block.
All right, those bells mean that it is time once again for the trading block, the portion of the show where we break down today's activity, the action going on across the old street. And it was a bit of a down day across most of the major indices, S&P and Dow, both closing down about 0.4% of a percentage point in NASDAQ. A bit of a lagger, but that's to the downside, so that's not exactly a bad thing if you're one of the diehard bulls in the audience. Down fractionally on the day, only about 1/10 of a percentage point. And the good old VIX cash, not surprisingly, getting a little bit of some air pushed back in, up about nearly 0.4 of a percentage point to close at 15.08. Perhaps we'll start there, as we are wont to do on the old program, with the oft bandied about subject of volatility and perhaps creeping back into the markets. You think all this, Andrew, is really just people perhaps putting on some long premium, closing out some shorts, and keeping their powder dry ahead of non-farms tomorrow?
I think pretty much. We've ever since Bernanke threw the shoe down in the spring, we've had every non-farm payroll has taken on added significance. Is this going to be the one? And I think as we get closer to next year, this could be the one that tips them into possible tapering. Who knows at this point? I guess Yellen's supposed to be more of a dove. Maybe she wants to drop her credentials. The thing is, after this payroll report, what do you got going on for the next 2 weeks? If you look at the calendar for Congress, they don't start debating this stuff till late January. So we might have a hole in volatility basically between now and 2 weeks coming when the Fed starts pulling some minutes out. So we might have a couple of weeks here where we don't have a lot of action. So I think anyway, we should see volatility probably creep back down, maybe 12.5, 13, by tomorrow, maybe Monday, Tuesday, VIX-wise.
That was going to be my next point, is that, people may be hedging their bets ahead of this non-farms. But once we get past that, there's really not much else for the rest of the year. You got the Fed meeting 17th and 18th, but everyone and their mother. I was over at the CME this morning talking to their chief economist. He as well. Everyone thinks they're going to punt and not really do much there. So talking in terms of things that are going to inject some vol, inject some movement into this marketplace. Once you get past non-farms, not a whole hell of a lot, particularly for a lot of our audience who wants to sit out there and harvest some premium every week. Next few weeks may be a little bit dry in that neck of the woods.
So you can see people maybe buying calls in the SPY and maybe buying a VIX call to protect, kind of driving the volatility up that way. You kind of get the twofer. The market tanks, you've got the VIX call, that might be worth something. If the market flies, then obviously, we could see those highs again. It seems the market drifts up there effortlessly. And the last payroll report, we rallied. Vol got crushed and we rallied, and it was huge. So I just go with how the market's performed historically after these, and it's been pretty much to term. Of course, this one won't be, but maybe it will.
And Mr. Tusaw, what caught your eye in today's somewhat active market?
Not too much. I will say this. I got one of my initial Apple bearish indicators today. And that's big news for you. The flags are going off, huh? What was that? I had a client email. These past couple days, I've had a client, one of my Apple people, emailing me stuff about how Apple is going way up and just feeling the utopia of Apple. So I told him this today too. So he knows that this is. So I'm not keeping this a secret from him or anything. I said, you realize that whenever people start emailing me these articles from Yahoo Finance or any other publication saying how Apple's going to 650 or 700 or things like that, that's been almost a surefire bearish indicator on Apple for the last 4 years for me. So took note of that, but nonetheless,
interesting. So the furor is on again over in RCM land for more Apple. I would think maybe they'd be getting leery that it might be getting a little top heavy here, but it sounds like the opposite is the case.
Oh, no. Apple people are an interesting breed. And long-term, I still like Apple as a long-term stock holding. I'm not backing away from it by any means. But short-term, I'm kind of looking at I'm getting going to be adding some hedges to it tomorrow, where I'm going to be tightening the noose tomorrow somewhat.
Yeah, I agree with you, Mike. We saw that this morning. Mark did a track the trade on it. We added something to our strategy letter. Crazy upside skew. What do we had? A couple of weeks here of rally in Apple, and just as Mike said, all of a sudden the out of the money call buyers are just coming out of the woodworks. You got parabolic skew in Apple again. You put on upside butterflies for almost nothing. So at least from the vol market, they are mirroring what Mike just said, that, all the happy people are back.
Yeah.
Yeah, well, that's a great example. We talk about in the show all the time about how, we could exploit these distortions in the marketplace, and now that the Apple zealots are apparently back, I don't know what's making them catch this tailwind. It seems like the bears have been out in force in Apple for quite some time, but no one's really been bidding up that call skew for quite a while. But now that they're back and they're buying up that call skew, you're right, Andrew. You can get into all sorts of fun upside verticals and flies and things for prices that are just ridiculous. So for all you people who write in all the time, say, how do you use this, how do you use that, how do you use that unusual activity, this is a great example. Take advantage of the zealots to put on whatever you want at fantastic fire sale Black Friday / Cyber Monday prices. Get it while the getting's good, because who knows how long the zealots are going to be out in the woodwork again. The stock could retrace and they could be hitting 480, 470, and the bears could come back out in force, because it's been a while since we've seen that kind of skew in Apple. It's been at least a couple of quarters.
Yeah, we were just laughing before I left that we had our clients trading like the 520 iron butterflies, and it was stuck there for 2 weeks. It was like unbelievable, and all of a sudden, boom. And I think the China Mobile thing might have something to do with it. The story with Apple was there really was no big growth anymore, but there are those billion Chinese consumers that could be a good potential source of growth for them.
There are a few people over there in China that may want to buy an Apple product or two. So
just a couple.
I think there's 3 of them in Shanghai, and they already bought their iPad, so I think they're good for the next year.
They lined up.
Speaking of lining up, while all of you guys are out there lining up to see the Viceroy, Mr. Viceroy, now that you're back in the office, what's been catching your eye? What was the day like over there at OX today? Give us a preview of the Xpress Block. A lot of action, a lot of activity, a lot of stuff going on the desk.
Yeah, well, Apple is the perennial favorite up here, and as both Mike and Andrew have pointed out, it's had new life again lately. I can tell you, having just come back from San Francisco and visiting with some friends of mine down in Palo Alto, the new iPad Air cannot be found. It has sold out. So I haven't been to an Apple store here since I got back. I got back late yesterday. But there's the general consensus out there, at least folks I saw in the Valley who are technology people, that there's going to be some trade lift here, that stuff is walking out of the stores again, and everybody's going to be looking at those numbers. So this next series of Apple earnings are going to be very interesting. Apple has been sort of a non-event at earnings the last couple times, but a lot of Apple. The other thing that was keeping the guys busy today were crude and gold. And 2 topics at the conference that came up a lot from people was tax selling in gold and the gold miners. And the other question I got a lot was the Iran peace dividend. A lot of disbelief about that, and how to play, when it doesn't work, if it doesn't work, gold going back through 1,1600 and oil going back through 150. So we talked a lot about ratio spreads, kind of Hail Mary out of the money plays. That came up a lot. Not a lot of conversation about hedging, which is always disturbing, but not uncommon in the option
hedging
business.
Isn't sexy, Alex. They're not going to come to you and ask you, how do I hedge my long Apple stock? It's just not fun. It's not fun. It's sexy.
Well, they want to touch the hat, but not a lot of conversation about hedging. Little conversation about tax selling. A lot of questions about did I think there was going to be a lot more tax selling? And, you kind of look at the group rotation this year and you say, really, other than the metals, there are some other examples, of what's going on, especially with some of the retailers where there may be some tax selling. But there's no putting aside that it's been a very, very good year. And traditionally, these last few weeks, based on a pure seasonality standpoint, tend to be okay. At the beginning of the show, we were talking about, what's going to drive this market for these last 3 to 4 weeks here. And traditionally, this seasonality here tends to be pretty good. Watched Peter Lynch last night on Charlie Rose, and I know the Geek Alert bells are going off, but one thing Peter said on Charlie Rose last night is he likes the market. And I was in his office once trying to give him some training and have crossed paths with him a few times over the years. And rarely was he as outspoken as to say, I like the market. He always talked about liking stocks. Now, his role may be different today, so he may have less restrictions on what he can say. But it was interesting to hear him say he really liked the market. And I think that's encouraging. And I think we could have a good last month here in the market.
Peter Lynch came up with my favorite, I suppose you can call it real-world indicator. He said if you're looking at buying a name like a big retailer, he said forget about the fundamentals, or maybe not even forget about them, but keep them in your back pocket, throw away technicals, and go sit in the parking lot and see if people are actually going to the store and buying stuff. And once you get a handle on that gives you a good guidepost for how you should look at the stock. I thought that was always pretty funny for a guy of his level and his caliber to use such a old-school analysis trick.
You know what? One of his most famous stories was the Ann Taylor story, and he talked about the fact that when his wife came home from the mall and her hands were just loaded with Ann Taylor bags, he bought the stock. And then he said a couple of years later she came home from the mall, and I looked in the trunk of the car, and there were no Ann Taylor bags. And he said, sold it with both hands. and he talked about how encumbered he was at Magellan because he was long only, and how at times he wanted to short things but couldn't. And the Ann Taylor example is one that comes back because he said when his wife's shopping experience was such that she stopped buying there, he wanted to get out of it, but he wanted to sell it. And but fundamentally he was the hardest working, in many ways one of the best investors. And to your point, Mark, what he did is he called the companies, he visited them. He did everything that everybody kind of poo-poos today. And one point he made is how much easier it is today with the internet and how you can get all that information. And he talked about he used to write letters and call the companies. And today you can sit on the call, on your laptop or desktop. So you also had a lot of bad things to say about high-frequency trading, and I thought I'd get that in. But it was interesting to see him on Charlie Rose.
Yeah, I guess he couldn't, back in the day, Magellan probably frowned on him buying puts, so he couldn't go that way either, to go to the dark side probably either. So he was stuck long only and then just liquidating when he wanted to get out.
Yeah, the smartest thing about Peter Lynch, I always thought too. I've read his books. I've always been very fascinated by him, and he was smart enough to get out when the getting was good. He left his game on top when he left Magellan, I thought.
Yeah, he said at its peak, 1 in every 100 Americans owned Magellan.
Yeah, it was ridiculous. When Magellan was really in the go-go 90s and it was just Magellan, and everyone and their mother was drafting Magellan's coattails, yeah, it became kind of almost ridiculous. You couldn't avoid owning that fund. It was everywhere. All right, speaking of everywhere, it's time for us to keep on rolling and get into all of the many, many weird trades coming on in the option market. It's time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, welcome to the Odd Block. This is, of course, the portion of the show where we break down the interesting and or the unusual options activity, lighten up the old tape. And first off, we have a newcomer to the old Odd Block. This is Arris Group Inc., ticker symbol ARRS, closing today $21.36, up about 2.5% or so on the day. And this is the name that does decent volume for the Odd Block anyway, about 1,300, 1,400 contracts a day. Doing about 12,000 today, so nearly 10x its ADV. So that alone puts it in the unusual camp. And then what we saw going up today was an interesting trade. On the surface, it might seem a little bearish, but then when you start digging into it a little more, it actually doesn't perhaps carry the same bearish weight. We saw someone today lighten up the Feb 15s. We saw about 5,100 or so of those going up for prices between $6.30 and $6.70. And looks like the bulk of it went up in small chunks, maybe some a little bit mid-sized blocks, but most of it being relatively small chunks, and most of it looks like it was sales. If you look at the open interest, though, it looks like there's about 11,000 open on that strike, so that starts begging the question of whether or not this is actually closing paper, and it looks like this is. In particular, when you pull up the chart here on Arris Group, this thing has been off to the races recently, as recently as back in mid-November, it was trading around the 17 handle, and then closing today 21.5. So it's been straight up over the past few weeks. This has all the telltale marks of someone taking a bunch of calls that he put on and that are now worth quite a bit more than when he bought them, and doing the old sell half and keep half for to see what else he can get out of the position. So looks like he's closing half and keeping the other half open because he might expect a little bit more upside here in good old Arris Group before all is said and done out in Feb expiration. Mr. Andrew, is that your take as well?
I think that is my take. It looks like they want to keep a little, they probably paid for the position, so you've got the position for free, or probably, I think, at a fat profit, it looks like. And they want to see if it can run some more. So for anybody looking at the stock, I think that's a pretty good sign. I like the fact that somebody was selling half. And, normally you see that kind of volume, and, unless you are in the pit, for sure that the customer put on a large size. But sometimes when it walks, as Alex would say, if it walks like a duck and it quacks like a duck, it's a duck. So I think that's what the customer's doing.
All right, and moving on to the next victim in the old odd block. I just came from this place, actually, the friendly confines of the CME Group. We were recording our show we do with them over there, the long and short of futures options. They had some interesting activity as well. Of course, CME Group, ticker symbol CME, closing today $79.11, down about $1 or so on the day. This is a fairly active name, particularly from an odd block perspective, doing about 5,000 contracts a day. And we saw just a ton of paper going up today, 145,000 contracts to be precise, and pretty much a good chunk of that, 2/3 or so, going up on the Jan 65 strike. We saw, when we first started writing this up on the site this morning, 77,820 of the Jan 65s going up. That number increased to 92,160 by the end of the day. Looks like they went up in about 7,000 contract blocks or so. This was some pretty serious institutional paper going up on or near the bid. So it looks like this was mostly opening sales. And, looking at what we wrote it up as here, given what's going on out here in CME, looks like this may be a div play. If it is, though, this just shows how the div play has evolved. This is a somewhat aggressive paper for a div play. Would you concur, Mr. Andrew?
Yeah, I mean, there's a 45-cent dividend. I would say most likely that this will be a sign. The thing is I'm not seeing countervailing paper on this. So I think what's happening is, the only thing I really could guess is the customer's buying stock against these, and he just wants to see what he's going to slide on with 21,000 open interest. 45-cent divvy, it's worth it. Not a lot of risk there on that synthetic put. So I think as a div play, they're just going for it. They're going to see if they could do the synthetic and get her done.
It's just funny, my memories of the old div play, we would always put them up on just, crazy strikes that were nowhere close to coming in at the money. They were, 30, 40, 50 handles away from the at the money strike. And now we got people doing them, in this case, 14 handles. It's still seriously in the money strike. It's just kind of interesting. And it shows how much risk they're willing to take to chase one of the few strikes out there in January that actually has some open interest. Like you said, 21,500 contracts. We talked about div trades on the show in the past. Listeners, of course, you need a lot of open interest to make these trades worthwhile. The more open interest you have, the better chance you have on skating on some of these calls and actually collecting that dividend that you otherwise really are not entitled to at all. The only other strike with any sort of real active volume out in Jan are the Jan 52 puts, and that ain't really going to do it. So you got to go call side here, and that's where this guy is focusing his activity. Nearly 100,000 contracts. We also saw 10,000 of the Jan 64s going up today. So people peppering all the strikes around it. Some of that's, of course, market makers hedging, but also that's going after the 2,000 open interest there. So interesting stuff. We haven't seen too many size div plays going up in all the names we watched. Some of that just because that business is tapering off ahead of what the OCC is planning to implement with their restrictions on keeping customers net long in order to get rid of some of these plays. So this might be one of the last big div plays we see going up if all of those proposals go through. But as of now, it's still legal, and you can see people are still willing to take this. This is a relatively safe trade, but it's not without risk. It's not unforeseeable that we could have some movement down to the 65 strike over the next month and a half. And then moving on here to actually a review of a name we highlighted back about a month and a half ago or so. This was Jive Software, ticker symbol JIVE. If you remember back on October 24th, that's, of course, when we record the show. The episode came out October 25th. And for all of you playing the home game, we're recording this episode on December 5th. Better late than never with the date. We talked back then on October 24th about someone coming in and gobbling up what at the time was not that far upside calls in Jive. They bought 5,000 of the Nove 12 halves for about 60 cents. At the time, the stock was trading about $12.32. Seemed like these had a decent chance of coming in the money and having Jive extend its range. Of course, these expired last month. And going back to see how this stock performed since we looked at it on October 24th and going into November expiration about 3 weeks later, these calls didn't exactly come to fruition. The stock right now, as of today, closed at $10.27, so substantially off that level. And back on November 15th on expiration, the stock closed at $11.19. So unfortunately for this guy, this really the stock never really looked back from that level. And so he never had a chance. It actually took like it put up about 6,500 total of these Nove 12 halves. So he lost anywhere between $300,000 and $400,000, depending on how much of this was the same guy. But yes, that's just we like to profile these losers every now and then, just so people know that not all of our trades. We actually do watch them, and we do see how these trades fare. And sometimes the winners are not exactly what you might expect. And the simple out of the money call buys, as you said many times on the show, not exactly the highest probability trade, and we're seeing that play out here again.
Well, the key to buying out of the money calls is giving yourself enough time. If you're really going to buy out of the money calls, you got to go longer term. It's cheaper in the long run to buy a farther out of the money or buy longer in time. You have less decay, and you got a better shot at yourself being right. Just the short-term stuff, you have to be so right so fast, it's almost impossible.
Exactly. Well said, sir. And again, if you'd like to read more of our unusual activity alerts, then surf on over to theoptionsinsider.com. You can click on the unusual activity tab. You can find more detail on these alerts we talked about today, as well as many more that we didn't have time to get to on the show. But now it's time to keep on rolling with the program. It's time for the Viceroy to don his jaunty cap, because it is time once again for the Xpress Block.
The Xpress Block, brought to you by Options Express. Options Express lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OXradio for your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, listeners, this is, of course, the portion of the program where the Viceroy himself gives you a behind-the-scenes VIP tour into the land known as Options Express. Normally, listeners, you have to pay mucho dinero to get this kind of access, but Alex gives it to you for free here every week on the show. Mr. Viceroy, I know you're fresh off the plane from your big San Fran adventure, but what's been cooking? What's been catching your eye? What's going on over there in the options mecca known as Options Express?
So we talked about how Apple was clearly kind of lighting up the tape today, and one thing that happens here is it seems that the the cadre of customers we have that are momentum players. When Apple kind of lights up the tape, we see it in Google and Netflix and AutoZone, all the triple digit stuff that people think that momentum's going to come into, and they want to buy some cheap out of the money. As Andrew so wisely noted, sometimes you need to go a little longer term. It isn't always the case here. One of the guys just handed me a note actually after the show started and said, very busy in Microsoft today as well. And I'm looking at that now. Microsoft traded some big numbers today. And the news there was that McLally wasn't going to leave Ford, or speculation that he wasn't going to leave Ford, because for a while he was thought to be coming to Microsoft.
Yeah, there was rumors that Alan Mulally, the CEO of Ford, was going to take over the reins at Microsoft. He's already turned around Ford, so it might be an interesting choice for that, but apparently not coming to fruition after all that speculation.
Yeah. Or he's negotiating on price. So
yeah, he's like, give me those options with a strike price of $5.
Yeah, well, they do have a lot of cash. The other thing that was active today was when I queried the desk on the futures side, a lot of business in gold today, a lot of business in energy today. And it was funny, I kind of looked up off my desk at one point today, and I was catching up. I haven't been in the office for 6 days, and I had 1,100 emails when I got back in, and I'd actually traveled with my iPad and tried to clean up the critical stuff. But the desk today was trying to get a quote on the old SIBO TNX, the 10-year, which I don't think trades anymore. I think they still broadcast it because it provides price discovery on the 10-year. And the 10-year clearly has had a run-up here, especially in the week I've been away from the desk. We're back up into the 280 area, and that starts to make me a bit cautious. But the tone has been good. You know, I mentioned a couple weeks back on the show that we had one of the best months we'd ever had, and I just got hard copy on the October numbers, and October for us and the industry was very, very good. And it's good to see people, you know, kind of migrating back to the options marketplace. I mean, you know, having a good year, having the market up, you know, most measures up 20 to 30%, obviously brings people back. It's interesting, in one comment at this conference, because I talked about the fact that I used to train and visit a lot of the macro hedge funds, and I guess the story about Eddie Lampert and his fund has been in the press for the last couple of days. But the macro funds have not had a good year. The macros have given a lot of money back. And it's because I think individual investors have done so well. So interesting what was going on today. We have had the futures guys pointed this out to me. If we're down tomorrow, it'll be the first week since September that we've had a down week. We've had the E-mini closing at the low for the week. So hopefully we're up tomorrow so we don't sort of set any records. But if we do, we'll have the first down week since September. And it looks like it was a lot of profit taking. Next week, we talked about this, seasonally should be good.
Yeah, I don't think you need a better barometer than just the attendance at that event you guys just did out in San Fran. 900 people in a room for talking about options is a great thing. Look at the numbers for this show, too. You know, they've been off the charts. So people are certainly taking those profits in the market and trying to figure out ways to put them to work. And if that brings them deeper into the options fold, then so be it. I think that's a good thing. For a lot of people, they learn how to hedge, they learn how to generate income, and do it in a proper risk mitigating fashion. Except for Tusaw, always talking about blasting out those downside puts. But ignore that, listeners, and listen to the rest of us here as we keep on rolling and give you guys a chance to sound off, because it's time for the mail block.
Now it's time to empty the mailbag and see what our listeners have to say. It's the mail block.
All right, everybody, welcome to the mail block. This is, of course, a portion of the show where we give you guys a chance to join the old all-star panel and let your voices be heard. And I'm constantly saying on the show here, you know, you can reach us via the website and Twitter and email. And we got a ton of those. But like I said before, so few people are using Facebook for whatever reason. It's just not a venue a lot of people use for options. So as we started recording the show, a message just popped up with a question from Facebook. And so I thought I might as well highlight it here on the show today because we want to encourage you guys who are out there using Facebook. It's okay for you guys, too, to write in and join the show and make your voices heard. And today's question comes from Dylan Harris. And he writes, I have a point I'd like discussed on the option block. Can you guys discuss locking in gains for long premium trades? Do you gamma scalp with stock or sell options against the position, or is it best to just close the position and save the commission costs? Love the shows. Thanks. Great question, Dylan. And it's something we touched on in various capacities on the show in the past. And it does come down to a bit of a personal preference thing. When we talked on the show before about gamma scalping and how we all used to do that on the floor when we were market makers, it's difficult to take that approach as an active retail customer. It's because you don't have the favorable margin treatment that we have. Most of our listeners probably don't have portfolio margin, which really is necessary to do a lot of this gamma scalping. And it ties up a lot of capital doing that. So there's very few of you out there that I would really recommend gamma scalping to. Who knows, perhaps, Dylan, you are in a position where that works for you. And if that's the case, and you think you're savvy enough to understand the delta and how to hedge it correctly and how to maybe game some swings in the underlying, then yeah, gamma scalping is a good way to make money. I think people don't realize that a lot of the money option traders used to make on the floor, professional option traders and market makers, a lot of what we would do day in, day out when the market was sitting there going sideways was scalping our gamma. And that was how we defended against time decay. That was how we made some money in quiet markets. It was all gamma scalping, and that was a lot of the business. And so people, I think, sometimes underestimate how big of a portion that could play in your overall options trading. But for you guys, listeners, I don't really recommend it unless you're very savvy and have sophisticated accounts that could take advantage of the margin. So that really gets into your other two suggestions that you made, which are, of course, selling a spread. And I'm a big fan of that, legging into a spread for levels that are otherwise unheard of because you have all these profits on one name. So then, of course, as long as you're happy with the spread and locking it in at that price and you know exactly what you have that spread on for, you can get buy spreads for credits and do all sorts of great things if you have a big gain on one leg. I think that's a great way to go if you're comfortable with that. But again, at the end of the day, no one's ever gone broke taking their winnings. There are a lot of people debating Bitcoin on the radio show this morning and whether they should sell it out here. And, you know, the old axiom is still applies here. If you're making a lot of money in a position and you want to sell it out, no one ever went broke taking a winning. Maybe we talked earlier about this customer selling half of his position. That's also a good way to proceed, where if you have let's say you have a 10 lot, you made a ton of money on that 10 lot, and you're still concerned about some upside, you sell 5 and you see what goes on with the other 5. Then you've made your money probably plus on the 5 lot, and so you can play a little bit with the house money on the other 5 and see what happens going on there. So that's a good approach to take as well. Uncle Mike Tuso, I can see you champing at the bit to dive in on this one. What's your approach to this when you have some gains? How do you usually unwind them?
All right, a couple ways with which to go about doing it. Number one, it depends on what the market's doing. If it's on a call option, let's just say that I'm long a call and the market goes up, then ultimately what I like to do is what some people have made fun of me on this show for doing, and that's the two-saw stupid. That is in fact where we sell the option with which we're in for a gain. And then a lot of times with a call option, as markets go higher, volatility can go lower. At that point, it might make sense, if we're still bullish on an underlying, to buy another call option at a higher strike price. By doing that, we're actually taking on less risk, and we still have some upside for doing it. The analogy that I like to give clients when we're doing moves like this, it's like if you own a stock goes higher. As it goes higher, you buy a put to protect your profits. That's the equivalent of rolling a call higher. On the call side, I'm typically not a fan of legging into a spread at that level, just because of the fact that the premium usually, not all times, but I'm just kind of going from experience, a lot of times the premium's not there to justify selling. Now on the put side, let's say that I'm still bearish. If volatility goes higher as the market goes down and I'm bearish on the underlying, then at that stage I would look to I'd be more apt to consider selling a put to create a spread or somewhere along those lines. So those are just some thoughts of some basic things that I like to do in situations like that. In terms of rolling up the calls, I've been practicing what I preach for the past 11 months now, it seems, with this bull market.
You know, I mock you for the stupid, but I take a much more favorable view of the rolling stupid, because then you have some momentum with you already, and there's a little bit more sense to it than just coming in and putting on a stupid straight up, because then it's just like you're indecisive. It's like, pick one. But of the rolling stupid, I could see a little bit more value in. Now, the frenetic typing means Mr. Andrew also wants to chime in, so Mr. Giovinazzi, what's your take on this one?
Well, all I can say is taking half is always good. I like the half. Actually, Mark and I were just discussing that today on a position that he had that was fairly sizable. So taking half is good. I think trading the options against the position is good. Ultimately, what it comes down to and what we try to teach people is what is your intent. So the only way you keep long gamma or keep long options on is if really your intent is to stay in the position, deeper into the term. So what that means is you have to have an exit strategy for that trade. And if you bought some cheap options and all of a sudden, vol pop, something like that, you start making some money, did you hit your target? Is the adjustment actually worth the cost for you to stay in? So you have to weigh all this stuff. And you generally have to know it before you get in. So while you do have choices with stock and trading the options, or even buying a time spread, there's so many ways to hedge this just depending on what looks good. But you have to have an intention first. So you've got to decide, okay, where am I? Where's the volatility? Where's the stock? Has it performed how I wanted? And if you think there is, more in the trade and the adjustment's is worthwhile, then you stay in. But if you hit your target, you're out. So it all comes down to the same fundamentals of discipline and what your exit strategy is prior to your entry.
Mr. Alex, you've been educating the masses since pretty much all of us, except for Andrew, were zygotes. So what's your take on this question? I'm sure you've had it asked to you a few times before.
Yeah, well, both Mike and Andrew are right, and there are probably about 50 different ways you can do this.
So you're saying I'm full of crap? Is that what you're saying? So those two are right, and I'm full of garbage?
No. When we started the Institute, day 3 of the 3-day class was all about managing the product, and that was post-trade decision-making. And the choices are not always easy. If this listener bought the Jan 500 calls in Apple when they were $1.50 and now they're $75. So depending on size, if they've got a couple of them, to sell one and just take, all your money off the table. You could stay in the trade. Mike pointed out you can roll up. You can buy a put. Interestingly enough, if they're deep in the money, consider them long stock. If they're a 90 delta position, hedge them the way you would hedge stock. Gamma scalping, as you pointed out, Mark, first of all, if the position is really large enough to have an effective gamma scalping net of commissions, then it's large enough to probably peel a couple off and sell them and have no money in the trade. And anytime you can take your money off the table, that's something you certainly have to consider. Spreading against them, cool, good idea. If the position's large enough, I would do a blend of things. It's like when customers ask the question, how do you hedge a $1 million portfolio? Third of it you write covered calls, third of it you buy some puts, and a third of it you don't hedge because you're going to be upset if it does go up. And by the way, that's not a hard and fast. But there's a lot of things the listener can do. But one thing the listener doesn't want to do is do nothing and come in tomorrow morning and $60 or $70 Apple January options are back at 50 cents and he's kicking himself. So we all had good advice, but there's a lot of things you can do. 2 things have to drive it. Number one, what do you think the stock is going to do in the next 10 or 15 days? And if the answer is I don't know, then I would clearly lighten the position. I would clearly take part of it off, maybe spread part of it, and maybe hedge part of it. If the answer is I still like this, then Mike says he gets criticized for the stupid. I would never criticize that rolling up trade. I think rolling up is terrific, especially if you can take all your money off the table. Yeah, you'll lose some delta, but you'll pick up a lot of gamma if you roll up. And if this thing continues to be a home run, you could do that a couple times and, got no money in the trade and you're still in it.
Just to add to that, on our SPY positions this year, I'd have to look, but let's say the S&P 500 went to 0, we would literally still be ahead on the year because we've rolled up so many times with our SPY diagonal call spread positions that we've been doing.
There you go. Great example of doing stuff, and great question there. And like our fellow listeners, if you're out there lurking on Facebook like Mr. Dylan Harris, then let your voice be heard and send us your question, comment, or insight. 4 great ways, 4 great takes here on what we do with long premium. Comes down to really each individual trader and how you view it. I think we can all can concur that gamma scalping, A, probably not the best way to go, and B, you never go broke taking some of those profits off the table. So you may want to consider that. And as Andrew said, probably have that plan going in ahead of time when you're making that trade to begin with. What you're going to do if it's up X amount, how much you're going to divest of, because that's a good way to make it systematic. You don't have to have these hand-wringing decisions when the thing takes off. You've already planned it out ahead of time, and then you can just refer to the system, and it takes a little bit of that hand-wringing out of the equation. All right, and that's going to do it for the old mail block, and now it's time for our final segment, Around the Block.
Around the Block.
All right, everybody. This is, of course, the Around the Block segment, our final portion of the show where we dive into what we're watching, what we're keeping an eye on for the rest of this week into the weekend. And as we really said at the top of the show, there's one thing and one thing only. There's non-farms, and there's non-farms, and that's kind of about it. And that's kind of why we're still seeing any vol, it seems like, holding up in this market, except for some other names that are getting crushed aggressively, like the metals and others. But other than that, really, in the equity landscape, it seems like non-farms is really about it. And once we get past tomorrow, unless it's some sort of catastrophic result that really catapults the market into some sort of tailspin, I don't really see what else gives us that injection of vol throughout the rest of the year. What's your take, Mr. Tusaw, for the rest of this week?
Well, yeah, the non-farms are what it's all going to be about, and I'm curious to see how gold reacts to it. We had a big rally the day before. We had kind of a sell-off today, so not only am I watching the overall stock market, but I'm curious to see what happens to gold over the course of the next couple of weeks. Obviously, there's always headline risk that exists, but there's really not a lot of potential on the horizon, so stay prepared anyway, folks. Don't let this market bore you to sleep.
As I said earlier, we were recording our episode of The Long and Short of Futures Options today. I had a chance to chat with the CME Group chief economist, and he had some interesting research he was talking about the systemic causes of gold volatility. I think a lot of our listeners, and even you, Uncle Mike Tusaw, might want to check that out over on the CMEGroup.com website. Interesting stuff on the root causes of gold volatility, what's going on in the jewelry market, what's going on overseas, and all kinds of interesting stuff that's kind of generating what we're seeing out there in those markets right now. Mr. Andrew, what are you watching for the rest of this week into next week, sir?
Same thing, non-farm payroll, seeing if the volatility can hold up. I don't think it will, but that doesn't mean the market is going to interpret tomorrow's number in some sort of freaky way. But we rallied on the last, when the payroll report was a surprise on the upside, and the ADP report obviously was pretty good. So there's a good shot at it. Volatility did not make a fresh high from its highs of the week, which I think usually is significant. Normally when people are real nervous, you do get that push higher right up into the close, and we didn't see that this time. It's definitely higher, but it didn't make a new high. And I'm kind of old school like that. I like to see new highs before I get a little worried. But what else? I'm actually still looking at Apple. There is interesting trades in there, and how the currencies really deal with this. The fact that there was rumors about a budget deal surfacing that kind of made the market rally a little bit this morning, and those quickly went away because that means our politicians would have to do work. But I think there are, on balance, still positive forces, and it's 2013, and the tide has usually been up, and there hasn't been a whole lot of negative to change that so far. Even the healthcare rollout really hasn't dampened anything, now that everybody knows what it is.
Mr. Viceroy, take us home. What are you watching for the rest of this week into next week?
Obviously, non-farm payrolls. I don't think the Fed meeting on the 17th and 18th is going to amount to much, but there's always the possibility of a surprise. Watching the 10-year again, don't like it bouncing up around 3. If it takes out 3, then there's going to be some rough sledding here. 5th down day tomorrow. If we're down, I think we'll see profit-taking continue. I kind of hope we're up tomorrow. The market rarely listens to me. But if we get an update tomorrow, we kind of break the streak and we don't close at a new weekly low. And barring other news, I think we're going to grind a little higher here in the last month. Again, with the exception of if the 10-year bounces up, that's going to be problematic.
Unfortunately, that is going to do it for this episode of the Option Block. Before we go, let me check in with each of my cohorts here and my partners in crime to see what they have cooking in their respective necks of the woods that may interest you. Starting off with you, Mr. Rock Lobster. I believe you have a pretty interesting webinar extravaganza coming up this Saturday that I may or may not be a part of. That should be very interesting for a lot of our listeners.
We have an extraordinary extravaganza on Saturday, I believe, what is it, from 9 Central to 12:30 Central, something like that?
Something like that. Crazy,
something
epic
like
4-hour extravaganza of education.
Yes. I will be doing call writing and protective puts and collaring and risk reversals, my own particular slant on how to really manage an equity position. So if you're a home gamer, you trade your own portfolio and you don't want to blow out next time we have another financial crisis, you might find this interesting. And this is how I manage my own, basically my own stock portfolio, the idea of just being able to trade your options around the equity positions you already own. So that's what I will be doing. Mark will be doing butterflies and spreads. And I believe some guy from the Option Radio Insider Radio Network will be talking about customer boo-boos and some of the mistakes the retail investors make.
Yes, I will call it Hey Boo-Boo. Hey Boo-Boo, you're smarter than the average bear. Trust me, listeners, Mr. Andrews' take is pretty slanted, so it's worth tuning in just for that alone to get his slanted take on how he manages his options. Again, you can find out more about that, theoptionsinsider.com/events, or over there at optionpit.com/events. A lot of great ways. Sign up because they seem like they're going pretty fast, and we want to make sure you guys can all get in. And, of course, if you sign up for that, I'm also going to throw in all of the files, all the archives that we haven't ever released for our big Unusual Activity Extravaganza that we held back at the CBOE a few months back. It was an epic event. So if you couldn't join us here in Chicago, now's your chance. Sign up for this webinar this weekend. You'll get all that data, all the files, even some behind-the-scenes interviews we shot with all of our panelists. Really cool stuff. So check that out, theoptionsinsider.com/events. And now, Mr. Tusaw, what is cooking in the land of RCM Wealth Advisors?
Well, we're getting geared up for January. We're going to take kind of a little 1-month hiatus from webinars because we know that everyone's getting geared up for the Day of Infamy webinar coming up this Saturday. But around January, we're excited, and we got a lot of new things in store. January, we're going to be adding a lot, so stay tuned.
I will stay tuned. And last but certainly not least, Mr. Viceroy, now that you're back in the warm and comfy environs of Chicago, what is cooking in the land of OX?
Just showcase a couple events this Saturday, the 7th, live from Scottsdale, Arizona. Never ceases to amaze me that as soon as it gets cold, the marketing team goes to Arizona, California, and Florida. But Jimmy Ruzan doing a live event from Scottsdale. If you want to participate in the event, but you're not in Scottsdale or not going to get on the corporate jet to fly to Scottsdale, we simulcast the event on the site. You don't need an account to participate in the event. Just come to optionsexpress.com, click on the education tab, put your email address in. They'll send you the link for the event. December 10th, showcase one of the webinars. We're going to be talking about the Idea Hub after the close of business, and one of my perennial favorites. So we do that after the close on the 10th, and once again, keep in mind, $150 Amazon gift card with a funded account, put $1,000 in the account, make 10 trades in the first 90 days, and get a C note and a half at Amazon.
Get him while the getting's good there, listeners. I know Alex has his eye on that drawer, and if you don't get him, he's heading for that drawer. So get him before the Viceroy can get all of your good Amazon discounts. And on behalf of Alex and Uncle Mike and Andrew and, of course, myself, I want to thank all of you guys out there in the listening audience for downloading and streaming and subscribing. And, of course, for sending in such great questions. Keep them up, even you Facebookers. We want to hear from you guys, too. And we'll see you next time right here on the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. Around the block.